Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Wednesday, the 24th of February, starting off with 88 Energy. And here we just have a reminder that the shares are trying to retest the best levels of the month around the 3 pence mark. Stop loss, a dynamic one at the 10-day moving average, 1.38 pence. And while we're above that, we could partially or even fully retest that peak earlier on in February. Starting off with, continuing rather with Alba Mineral Resources, and beautiful chart here after the gap through the 200-day moving average at 0.38 pence. Yesterday's low 0.42 pence, and therefore really well above the 200-day line. On an end-of-day close, we could head up as high as a best-case scenario target of 1.4 pence. Ideally, there won't be any break back now below 0.55 pence on a sustained basis, which was the initial February resistance. Obviously, with the RSI very overbought at 87, there is a chance of a bit more of a dance in the 0.4 to 0.6 pence zone, but the breakout has at least started initially here. Atlas Development is next, and here we can see a difficult situation here. Obviously, break to the downside, an extended one over recent months. Positive sign here is that we've got a possible falling wedge reversal. Nice bounce yesterday off the floor of that wedge formation and then hitting the resistance line there towards 0.37 pence. End of day close above this line should be enough to get us up to the 50-day moving average of 0.43 pence, but really an end of day close is the big buy signal here above the 50-day line to take us up to 0.6 pence plus. Stop loss currently below 0.25 pence, but aggressive traders be going long now on the basis that this formation is a positive one. Next up, ECR Minerals, which I know is quite a favorite amongst private investors at the moment. We had the break above the 50-day moving average, 0.02 pence, and really well above that, looking for an initial target, 0.057 pence. Over the next 2 to 4 weeks. Best case scenario target over the next couple of months, as high as 0.09 pence at the top of this broadening July triangle. Moving along to Proxama, and favorite type of setup here in terms of the gap through the 50-day moving average. We've bounced higher than that, the top of that gap, which is at 0.95, which is at 0.7 pence. But at least while we're above that, looking for further gains. Initial target here towards 1.25 pence, which is the 200-day moving average. And then after that, 2 pence, the top of a rising September price channel over the next couple of months. If you're cautious on the shares, maybe wait for end-of-day close above the 20-day moving average, 1.04 pence, and RSI 50 before going long. Moving on to Stellar Resources, nice break through the 200-day moving average, 0.34 pence yesterday after the gap through the 50-day moving average earlier on this month. Target here 0.6 pence, the top of a rising July trend channel, and really looks like we're finally getting off the ground here in terms of the extended basing that's been in place since the summer. Finishing off with UCOG, which I tweeted out yesterday. This is the screenshot again. The key here was really the break of the initial February resistance at 2.6 pence. Above that, on an end-of-day close basis, we should head quite quickly towards the implied target as high as 5 pence, which is post 2015 range highs. At this stage, only really back below the 2.6 pence level on an end-of-day close basis would be a dangerous sign for the bull argument. That's it from me. More updates at the same time tomorrow.